Hi viewers, welcome to Baruch Forex Trading Academy. Today I'll be sharing with you one of my favorite trading strategy, which is called pin bar strategy. It is very simple strategy, guys, and profitable. And it is good for position traders. If you are position traders, and this strategy will be very good for you. Before we start, I would like to remind you, as usual, all the information in this video is for educational purpose and should not be considered as financial advice. Okay, let's dive into the video now. As I said earlier, pin bar is always my favorite price action signal. Pin bar is one of the most powerful and high probability trading signals when they are traded in right perspective. I'm saying right perspective. I will explain to you what I mean by right perspective. Of course, you need to know the support and resistance, demand and supply in the chart. Okay. Basically, this pin bar tells you that the market is ready to reverse. So it's a kind of like indication upfront. Okay. Okay, what is pin bar? Okay, let me explain. If you study candlestick analysis, this is how the candle is being drawn. Okay, so this is the body, and this is called wick. Okay, what it tells you is basically if it is a bullish market, this is the open price and this is the close price, and this is the price that being traded at lowest, and this is the price traded the highest. So we call low, high, open, close. So this is bullish pin bar. Bearish pin bar is this is open, close. When you open at a higher price and close at lower price, market is going down, and this is the wick. So this is the highest price, and this is the lowest price. So if you buy here, when the market open price here, you buy. In Forex, if you sell, you still make money. But if you buy, then you'll be losing money. In this case, if you buy, you make money here. But if your contract, if you have a buy contract here, but if the price drop, you'll be losing. But somehow or other, when the price comes back and goes up, then you make profits. So I suggest, why not you browse through internet, pull some material on candlestick and study. Okay, because I won't be able to explain about candlestick analysis here. But for this purpose, just remember, this is how the bullish pin bar look like, and this is how bearish pin bar look like. But there is a condition. We only call pin bar when you see the body is like 1/3 of the total length of the candle. So like basically the wick is 2/3 and the body is 1/3, and this is called pin bar. Okay, same over here, bearish pin bar. The body is like almost like 1/3 of the entire candle height. Okay, now let's move to the next slide. Okay, if you look at this slide, you see these are the candles, right? The price going up, then comes down. The only thing that you see here is, you see this is the bullish candle, and somehow or other price gone up, but somehow or other it comes back, came down. And if you look at the body of this candle here, It's almost like 1/3 of the entire candle length or candle height. So this is called pin bar. So whenever you see this pin bar, basically it tells you that market potentially will go down. So we call market reversal. Market going to reverse. Same in this diagram here. Market from up came down, then it goes up. But if you look at the candle in circle, this is a pin bar, because market here, it opens here, then it closes, then it go all the way down and push back, push up, right? So this is like we call bullish pin bar, because price has gone down and being pushed back again, and the market continuously go up. Of course, market doesn't go continuously, in like a linear curve. Always there is a kind of like a variation. I mean, it always change. The price go up, then it retraces back and go up. Okay, now I extracted a complete chart for you. This is Euro USD weekly chart. So this is the market trend, right? Okay, market up, then coming down, then suddenly it stopped, then it was like in consolidation period, then it gone up, then it comes back again. This is the market behavior. Okay, but remember I told you earlier, pin bar, you need to use this pin bar in right perspective. When I say right perspective, this pin bar always goes along with support and resistance line. In this case, this is a support line. See, market gone up and come down and being stopped here and gone up. So this is a support. So when market break through the support, it came down, then it was consolidating, it retest again. It retests the support line. Let me blow up the curve. Okay, I hope you can see now very clearly here. This is a support line. So market break the support, then in consolidation period, then it retests. So now this support line become resistance line. So if you look at this candle here, there is a pin bar candle, because the market gone all the way up, but somehow or other being pushed down. Okay, so let me blow up the diagram again. So this is the pin bar. Okay, this is the pin bar. Okay, the way we use pin bar for our trading strategy is, you always take the Fibo, pull the Fibonacci retracement from this point to the highest point here. Okay, and you see the 50% retracement here. Why I think 50% retracement is basically, most of the time market, when it came down, it doesn't always go straight down like this. It always, market have a tendency to retest again whether this is a really resistant line. So what happened is, when the price came down on the next day or next week, this is a weekly chart, so it tend to go up again to retest. And remember, trading is a probability struggle. You use probability. Okay, you won't win every time, you won't lose every time. There's always a probability. So the idea is how you identify the highest probability for your setup. So my strategy is basically, when I see the pin bar, I will set my sell limit, because I intend to sell. So I set the sell limit at 50%, Fibonacci here, because most of the time market will retrace back. So when it retraces, and when I set the sell limit 50%, your trade will be triggered. What if the price doesn't come down, but it continue to go up? Then your loss will be minimized. Because if you set the sell limit here and your trade is being triggered, then unfortunately it goes up. Then your loss will be very high, because this candle is pretty big. So I'm trying to minimize 50% of my loss. That is the reason I set 50%. I suggest, why not you do backtest before you adopt this strategy. Maybe 50 trades. That will be good. Okay, before that, let me remind you. So if you like this video, my presentation, please subscribe and press the bell button so that whenever I upload new video, you'll be notified. And of course, my intention is to share my ideas, and my philosophy is learn together. Okay, and I would like to share my knowledge. So I hope you can support me by subscribing my channel. Okay, so after you set the 50% Fibo, your sell limit at 50% Fibo, if the price retraces at more than 50% here, it get triggered. Then after that, the price came down, and all this area is profits. And as I mentioned earlier, this strategy I would recommend if you are a position traders. What I mean by position traders? Position traders mean you hold the position for few days, few weeks. You don't close within a day. And I don't recommend this strategy if you are a intraday trader. I mean, you try to open today morning and close evening, and I don't think this strategy is really good for you. If you are a position trader, and you should try this. I mean, you can try and see whether it is workable. Again, this is my advice. Don't take this as a financial advice. This is only an education, which I've tried. So I suggest you try backtest. If it is really working for you, you can use this strategy. Okay? So this is the 50% Fibo. Okay, this line. And I suggest you set the stop loss above the candle high. See the high of the candle here. This is a low high. So perhaps you can set 50 pips or 20 pips above. Okay. Okay, guys. That is the strategy that I wanted to share today. Let's meet in another episode. I will come with a new strategy for you to try. Till then, I suggest you try this method. Perhaps you can do backtest 50 times to see if this method is really suited for your trading style. And remember, if a position trader is good for you, and if it is give you the desired result, why not? By all means, you can always adopt this strategy to make the profit. Okay, don't forget, please subscribe and press the bell button. Share with your friends. In a way you can help them if they really need this strategy. They can also try. Okay, share with your friends. And again, I believe in sharing my knowledge. Let's learn together and be successful forex trader. Okay, you can also try this method for stock trading. Okay, this method is not limited only for forex. You can also try for stock trading. Okay, you can always drop me an email if you have anything to clarify or any question. Drop me an email at fxcandles@gmail.com. or you can reach me through Telegram, Baruch Forex Trading Academy. Okay guys, till then, see you. Take care. Bye.